Hello, trading has closed on November 18th, 2025. As always, we'll start with our disclaimer, go over our calls, then make our predictions. It's my trading plan for Wednesday, which is the 19th of November, 2025. It's a plan right now. I can change it, I can be wrong, trade at your own risk. I have personal business tomorrow in the afternoon. I don't know if I'm going to do any trading or not, which means I might not be risking my own money on what I'm going to say. Well, let's start by going over things. We said this pattern from yesterday normally closes at the low, but today's open could substitute for that, and we did that. We got a new low. We also had mixed signals, which calls for a likely gap and prompt move outside yesterday's range, which we got. So that's all played out. Here's what we said. Gap, prompt move outside the range. Tomorrow has the early low. It's usually a bullish day, but the pattern often isn't as clear as I'd like it to be. During the day in the morning, MEJT gave an ultimate buy signal, and ultimately we traded higher. In the afternoon, we got an ultimate buy and an ultimate sell. Everything played out. For the ultimate buy, we got minimum target and then exceeded it. For the ultimate sell, we got the minimum target and then exceeded it. That's all played out. Here is the daily chart. This yellow line is Tom DeMark's TDST line. The TDST line and one bar below it, one full bar below it, is the support area. So we had a strong reversal from the low. The low came right at the 89-day moving average, and we reversed from a support area. Now again, this support doesn't have to hold. You can print one full bar under it, and if you print one full bar under that bar, then it breaks. But that doesn't mean you have to print a bar under it. This is one of his support levels. So let's remember, because we're going to see some other support levels too, let's remember we have support from the moving average and from the TDST line. This green line is a prior FOMC announcement price. It can be resistance, can also be support. Right now it's support. What was the close? 661732. Well, it is slightly under it, but it happened in the last few minutes. I don't count that. The last 5 minutes breaking support, I don't count, because it's not everybody participating. Doesn't mean the support has to hold, but it's not a support level. If we gap up, then it's held, and if we don't, then it breaks. Let's look at some more stuff. Right now, let's see, we gap down, hit lower lows, closed over all the lows. Now, time doesn't run out until tomorrow's open, but right now, that's a bullish pattern. You gap down, hit lower lows, close over all the lows. It's bullish. Would be a lot more bullish if you could close over these highs. And so if, in capital letters, if we gap up tomorrow, which isn't assured at all, futures are down last time I looked, and they haven't opened yet when I'm recording this. We gap up here, that's a bullish pattern, but it hasn't happened yet. Let's start with our wave count. We had this from the all-time high as wave A. We had this as wave B. If that's the right count, C is equal to A right there. Now, doesn't mean it's the only count. Doesn't mean this isn't an ABC and can't go down, but at least you've got more fib support. That's a 30-minute chart. Let's look at the larger time frame. Here's the daily chart. We just looked at this move for ABC. That was wave C. Let's look at wave A and wave C. If that's wave A and it's 61.8%, Wave C is right at the 100. So even on that time frame, you've got Fibonacci support. And just to drive the point home, here's wave 2. If you look at wave 2, this bottom is right at 78.6% of wave 2. I mean, you've got Fib support on multiple time frames right here. You've got support from the FOMC announcement price and the moving average. If this holds, and that's not assured by any means, if this holds, you can have a good rally from here before the decline resumes. I don't know if it's going to hold or not. Now, Wednesday's pattern has a yearly low. Typically, it's a bullish day with a final hour high, but if it's bearish, we should see more weakness. Now, a gap down, hit a lower low, but closed over intraday lows. And if it's maintained, that's an if. It's a bullish pattern, should lead to higher prices, regardless of the close. Now, breadth is measured by this indicator. Bullish percentage of S&P stocks continues to drop. So regardless of what happens tomorrow, this decline's not over. But just because the decline's not over, that doesn't mean we have to drop tomorrow. There are a number of signs compatible with today being an oversold low. The volatility index printed the bar completely over its upper Bollinger Band. That's a sign of panic selling. CNN has a fear greed index that's showing extreme fear. It's a contrary indicator. We're within a day of a Fibonacci 21 days from the all-time high. The waves balance out at today's low. Today's lows were at significant support levels. If we rally here, you can explain it, and if it fails, then support fails, with all that implies. I'm not keen on taking a counter-trend trade here, but if we can hold today's lows, and particularly if we maintain a gap up, which isn't assured since futures are down as I write this, then the elements are there for a counter-trend rally tomorrow. Now, I have personal business in the afternoon. I'm probably not going to risk my own money on this. I'm not going to take a counter-trend trade and then walk away. But there's a lot going for us, a counter-trend rally tomorrow, even though the low's not in. So it's the pattern tomorrow with the early low. Tends to be a bullish day. I don't know how we'll open, but if, and that's a big if in capital letters, if we can gap over this, we could have a nice party to the upside, even though I know it's not going to stick. And if these lows don't hold, it could be a major league tank. Right now, it looks like we hit an oversold low here. We covered over support, which was resistance, is now support. And depending on how we open, tomorrow could be a counter-trend rally. It's the pattern with the early low and the late high, and that's today's call.